Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, August the 18th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live coaching sessions to take a look at the market, macro to micro, take a look at the structure of the market, then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. We have two main hypotheses and then two alternative hypotheses for extension. Yesterday, we got our Hypo 3 extension and a trend day down, but we'll get into that in just a minute. This is a subscription room. If you're interested in checking it out, you can send me an email to quantumleapfutures@gmail.com. There's no website, there's no blog. I do this live each day in the pre-market session, and then I do live trading and analysis during the course of the trading day. You can check out my YouTube channel. There's over, I don't know how many days, probably at least 2 or 3 years of trading days up there. We do this pre-market session each morning for the most part, if I'm not sick or on vacation. Of course, if you're here, you're already following me on Twitter at Crazy2. And if you want to call me directly, I'm always open to phone calls, as well as if you want to come into the room and check us out, you'll need a Skype account. It's easy to open up. It's free to do. The Skype is free to do. And then just send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Okay, so let's take a look at yesterday. Oh, actually, let's do the disclaimer first. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and the trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at yesterday's trade chart, our level chart, our main hypothesis, Hypo 1 was an open auction just out of range, a move up into the value area, and then finding responsive sellers and rotating us down into that 5750, which was our key target on Hypo 1, chopping around and going sideways. We weren't looking for a big day. Hypo 1 played out perfectly, okay, and then we got below the average true range for the day. The daily full session ATR target was down here at 24.54, and we said if we got below that, we could go into Hypo 3, and Hypo 3 was extension down into the 40 area to the 35 area. And we said, and you go back and check the recording yesterday, we talked about the fact that if we got down to that 35 level again, we were likely not going to bounce. We were going to blow through it and go hit some of the bigger targets down in the gap zone. And that's exactly what that happened. This is a classic trend day. I had a good day, but I didn't trade. I didn't stay in that short long enough, and I had a good day, but I didn't trade the second half of the day very well because I got out of the short. And when you get out of the short on a trend day, you don't want to sell in the hole, and then you start trying to scalp to the long side, which is basically what I did for most part, except for that break below the double bottom here at the 40 area. We closed with the VPOC shifting down. I call it stealing the VPOC into the close, and then we closed at the lows. And we talked about this in the room, that we were likely to get continuation down overnight to some of those targets down below in the 24 area. And we actually got to a low overnight of 24.2375. So very much a classic trend day down. Now each day I like to take a look at the news, so we'll go ahead and take a look at the news. We did have Canadian CPI coming out, a bit of a miss on the CPI. We really don't have any other news other than headline news. We've got the Barcelona attack. We've got Trump news all over the place. Everybody's losing faith in Trump and starting to speak their mind. So that, we could see some volatility continue. If you look at our full session daily ATR, and we talked about this a couple weeks ago, that we had actually gotten down below the 14 points on the full session average true range. When that happens, you're getting that compression, and then you're going to get that expansion, and we're going to get price discovery and a breakout of balance, and then your daily range is going to expand. And our 20 period daily ATR has now expanded to over 16 points, 16.10. So the only news we've got on the market right now, really this morning, is the Michigan consumer expectations and sentiment, and that's about it. We've got Kaplan speaking at 10:15, and we've got 10:30 ECRI weekly annualized. We've got Baker Hughes oil rig count coming out at 1 o'clock, and that's it. So nothing really big on the scheduled news. Now, I like to start my day. I use a simple candlestick chart. Now, I had somebody send me an email yesterday. I want to make something perfectly clear, and you can query the other members in the room. I use my paper money because I got live data, but my live toss account is on my trading computer, which is isolated. So because I get the live data, I watch my my internals and my sectors using my paper money, because I can open up a second account and use it on this computer. But I do trade live. I have not paper traded in years. But I like to start my day with a simple candlestick chart with a 9 EMA, 20 SMA. I start with a monthly. What I'm doing is I'm looking at where we are in the time frame, okay, where we are in the trend. And I want to see on what time frames is the trend being challenged. And I use the 9 EMA as the challenge point and the violation point down here at the 20 SMA. So we got good slope and separation. Prices paralleling nicely. We don't even begin to challenge the longer time frame trend until we get down into 2360 area. Going to the weekly, we talked about this 2 weeks ago, that or beginning of last week actually, that we had that inside week. So we had a Mr. Sneaky on the weekly time frame, and that we were likely to come down and close the technical gap here and test the 9 EMA on the weekly, and we've now closed below the 9 EMA this week and last week. And this is a key trend line right here. This is actually on the daily. You can see that this trend line goes all the way back into the beginning of 2017, and we've come down and we've tested this trend line a couple times. This is the first time that we've closed below it. So we are breaking a major key support. We're below the 9 and the 20, and we're now getting a possible trend change, okay, with slope and separation to the downside on the daily. As we move into the intraday, you can see that we've created this H pattern. This is not good, for longs. If we break the key support right now, we could get continuation. Right now, we're below the 9 and the 20. Good slope and separation to the downside, but we've created a inside bar. I call this a foo bar, Mr. Sneaky, with a technical gap, and we're likely to come up and test this this trend line and the 9 EMA to close the technical gap, before we get continuation down. I think today we're looking at a balancing day, unless we break key support, which I'm going to talk about in just a couple of minutes. Going to the 1 hour, you can see that we've had strong slope and separation, but we're getting into this consolidation pattern and trying to get back above the 20. We're above the 9 right now. So we are finding some buying and could get some responsive buying up into the significant breakout candle, 50% retracement. Going to the 30-minute, you can see same thing, consolidation above the 9 and the 20. That continues on the 15 and on the 5-minute, where the 5-minute though has come back down. We do have a naked cross right here at the 2430 area. So keep an eye on this because we're likely to come down and challenge that if we cannot hold and get back above the 3150 area. So taking a look at the bigger picture, the structure. Okay, and I'm just going to give a little bit of narration of the context because I always like to put context so you understand where my hypotheses are coming from. We create this longer time frame balance, okay, that goes from May 25th through to the breakout of balance that happened on the 12th of July, and we create this microcomposite VPOC, major price acceptance, at the 3550 area. Then we break out of that value area and we come up and we accept value just above it at the 2440 area. Then we come up, balance for 3 days at 5750, and then we come into this this area. We create new balance up here around the 69, and then they fall out of balance, come down to the 5750. That's the first time. Okay, first time they find buyers, they come back up, they balance out just slightly above the 69 at the 72 area. Then they go in and they put in this blow off top up at 88.50, create the new all-time high, come back here and they fall out. And the second time down, they do not hold that 57.50. Why? They already picked up the late buyers down there. So now they come down to the next area, okay, which is the area that they accepted value after the breakout, and they actually pushed through that to the 35.50. And yesterday we were talking about this, and I've talked about this several times. We find our buyers down there. That's the first time back. They pick up the late buyers. They gap up. They come up here, and they try to hold value out here at the 63.50, 64 area. They push it up, but they're unable to hold it, okay, at the 72 area. And then they come down. We gap down. We come up, and we fail to get inside of the prior day, and they reject the area of price acceptance where they were trying to hold value, and then we fall out and we get below our key line in the sand. Yesterday was our key line in the sand, and I said if we came down and we came down into this 35, we were not likely, okay, to hold this time because we already picked up the late buyers down there. So they're advertising price discovery to the buyers. Where are they going to have to go? They're going to have to come down lower. And what did they do? They came all the way down to a naked VPOC on the daily at the 27.75, and so far we're creating some price acceptance and balance here. Now, this area right here, this distribution zone that runs from the 51 to the 14.75 has multiple areas of price acceptance, what I call undetermined fair value. And when this happens and we get back into an area like this, okay, the auction has to mature itself. Yes, we know that 35.50 is the prominent price acceptance in this area, so it's going to act as a bit of a magnet, but we're likely to get stuck chopping around in this area as we mature the auction, just as we did up here, okay, until 69 became the prominent. So we're likely to get stuck down here. Key levels to keep an eye on today, of course, is the 27.75. Okay, that's the bottom of the H, and if we can't hold there, we're likely to go down and take out that overnight low down at 23.75. I am expecting a balancing day here in this area between the 22.75 and the 35. The 50% of the significant breakout candle, this candle right here, is all the way up at 24.46. So if we can get back up above the 40 area, the last area of price acceptance, then I'm looking for that trip up into the 50% retracement of the significant breakout candle. Key area right now is shifting down. The key line in the sand shifts to 24.1475, and that's going to be, and the key line above is going to shift to 51, and that's a big area. Okay, and we're likely to get stuck inside of this value area that we were in before, and that runs up to the 24.40 and a quarter and down to the 24.18 and a quarter, and we're likely to chop around here for a few days. can we continue down? Absolutely. Can we break above and take back? Absolutely. But the likelihood, the probability is we are going to get stuck in this area, okay, of undetermined fair value back in the prior value area. We've got a naked close down here at 24.75 to pay attention. Key below that is going to be the overnight low, which we bounced off of down here at the 23.75. I mean, these levels are not arbitrary. Okay, these levels are areas of auction, of price acceptance and rejection. And if you think in terms of auction logic, okay, it gets more simple. You don't have to overcomplicate it. So right now we're chopping in this lower distribution, okay, where the buyers halted the price discovery lower in around the CHVN at 30 and a quarter. Key area you want to watch right now is, can we get back above that 31.75? If they do, I'd be looking for a trip up into the 34 and 35 area, possibly even continuation up into the 40. If we fail that, then I'm looking for them to come down and challenge the low of the prior day and push down to the lower distribution of 25 and a quarter, and anything below that down to take out the overnight low and a move down to 22.75. Below the 14, it gets really messy because there's nothing holding us up down here until we get down to this 23.95 area. And we've got a naked close down here and another gap zone down here at the 23.99. The psychological number is going to be the 24.01 and a quarter. So that becomes major support below. Above the 40, to me, area is going to be our key line in the sand with the major resistance coming in up here at the 51. So if we take a look at the overnight session, you can see that the overnight session is fairly balanced. We've got a decent, it's not, I mean, it's very toothy, but a decent Gaussian distribution. We found balance. You can see that the VPOC at 29.75 is just below the VPOC in the Globex, and we're really neutral in terms of time and price on the Globex, so that's not giving us any direction. That's telling us likely that the probability is going to be a rotational day today and a balancing day after a big breakout day. I forget to check what the actual range was on the full session, so let's just take a look at that. So yesterday, our range was 44.75, and if I'm correct, I believe that is the largest full session range of 2017. This one was, I think, 42, and this one was 42, and that's it. That's we just had the largest range. This one was 41 and a half, so this is the largest range and the largest breakdown, okay, of 2017. So going to shift our numbers, our overnight high is 24.34. Our overnight low is 23 and a quarter. Come on. And our overnight VPOC is not likely to shift. It could. We do have time, but it doesn't look like we're going to shift. 24.30. And there's really no LVN that I have to pay attention to. So in terms of the ranges, are off of our low of 23.75. Our upside ATR, like our full session ATR, is running at 16.10. So our upside ATR target is 39.75. There's my daily. Oh, it's going to be way up here, isn't it? Yep. What did I say it was? 39. So our daily ATR is 39.75, which is interesting because that's one tick below the weekly ATR downside target. So we are currently in range expansion on the week. Our week high is 24.74. Our full session 20 period average true range on the weekly is 33.887, so call it 34. And so our downside weekly ATR, and something we were watching yesterday, is at 40, and our daily upside is 39. So it'll be unlikely, okay, that we push all the way up there. But if we do get back up inside of it, then I'm looking for the move up into the retracement, the 50% retracement of the significant breakout candle, which is up at 46. Our downside daily ATR is running off of the high overnight at 24.1790, so call that 24.18. So we have range capabilities, okay, up to the 40s and down to the 18s without getting range expansion. The critical mass, our week open is 24.4150. That was another key area we were watching if we got below it. And our daily ATR with the last day of trading today is 1610. So our weekly critical mass is 2550. Sorry, yeah, 2550. What do I mean by critical mass? If we get below the average true range down on, with 1 day left below the weekly open, sorry, let me just get this in here, then it's unlikely that this week is going to be a positive week. And therefore, the theory in critical mass is that the buyers could capitulate, the sellers take control, and we get expansion down. A couple key numbers to pay attention to. The July open is down at 22, and we're already at our month low right now. And our key line in the sand for me right now is 24.1475, and below that I'm targeting this 24.08 area, which is naked close and naked VPOC. Now, our July low and our June low, okay, are down at 02.25, 05.25. I doubt we're going to get down there, but just in case we get an expansion day and a continuation down, this area down here is going to be a major target below if we break below the 1475. So what is my main hypothesis today? My main hypothesis is rotation. Okay, so I'm looking for an open auction just in range. I'm looking for them to try to push this down into the overnight low, and then somewhere between the 24 and the 19, I'm looking for responsive buyers to come back up and start rotating us in this area between 40 and 25 around the microcomposite VPOC inside of that value area, okay, on the longer time frame microcomposite. That is my hypo 1. Hypo 2 is going to be very similar. Only difference is we're looking for an early push up, so we're looking for responsive buying up into the 35 and then chopping between the 35 and 40, get a failed breakout above the week open, and then come back down here and start chopping around in the 29 area and fighting the low from the prior day down here at 27.75. That's hypo 1. Hypo 2. Hypo 3 is a continuation day, finding responsive buyers, failure to get above the weekly open, find the sellers, rotate us down into the overnight low, chop in the 22 to 18 area, and then break through the daily ATR and push down towards this 24.08 area and close somewhere, okay, down here. I think it's unlikely due to the range, but due to the way the market is reacting right now in that H pattern, if we break that 25 50, we could see another liquidation break and a move down. And then hypo 4 is a return to the 50% of the significant breakout candle. So looking for a failure to hold below the prior day range, a false break or a quick break, and then finding responsive buyers, rotating us up into the 35, chopping around here, and then pushing up into the 40, 39 area, fighting that weak open, and then pushing up and coming up here and closing between the 46 and 49. Again, these are unlikely. Just pay attention. If we do accept that 40, the two targets is the significant 50% of the significant breakout, and then where the VPOC, okay, held most of the day, and up here in this upper distribution of around the 50 area, 50, 52 area. The value area does not mean squat because we were in a trend day, so there is no real level on the value areas. So those are my levels for the day in the hypo. Very important thing I want to talk about right now is gold. Okay, and if you've been following me or you've been watching the YouTube videos, we've been talking about this. That we failed at that 13 level the last time, and then we rotated all the way down almost 100 points, and then we started working our way up. And as we were working our way up, our composite VPOC, our longer time frame composite VPOC, or the most traded price going all the way back to October the 24th, 2008, was down here at the 2463. So, we've been talking about moving up and then coming up and accepting this price at the 63 and then continuing the leg up. And if you look at the 61% retracement of this move up, it was down to the 57.20 area, and then we came up and we accepted this, and then we came up and we tried to push through. They failed at the 1298, and they came back. And on Tuesday, I talked about this on Tuesday morning, we had a shift overnight of the composite VPOC at 63.10 up to the 75, and I said, this is likely to chop around here and create a basing pattern and can get the continuation up into our main target above, which was the 1302. If you traded a one lot here at the 1275, and we talked about it on Tuesday and held, okay, that's a $27 to $28 move that we've made on a one lot. That's $2,800, and very little risk. Okay, because we said if we broke down below the 72, then we're likely to come back down here and look for the shift of the composite VPOC to shift back down here. And that never happened. We created our basing pattern. And then yesterday, we were talking about if we came up and accepted this 91, I was looking for that push up. We didn't get it yesterday, but they came up, and the two-day price acceptance is here at the 93. And what do? We get a price acceptance higher, and they continue up into our target and into 1300. We are now in the 1300s. Okay, so we're back above a centennial number. So now we're looking for the rule of 10 to play out, and we're looking for a move into the 1310. Will it happen today? It doesn't have to happen. We could pull back, but now that we breached the 1300 and the last fractal high, okay, the likelihood is we're going to move to the 1310, more likely up into the 1312.20 area. And then I got to go way back here, okay, to start looking for our targets into the 1300s. And we'll start doing that once we get into the 1300. The most significant one above the 1312 and 1310 area is going to be up here. Well, there's going to be one right here, right around the 12. But the next big one is going to be up here at the 1323.50 area. But I'm not going to look at that until we hold the 1300s, and then I've got to go back a long way. I mean, we got to go all the way back to, back into October area of 2016 to start looking at the levels below. So gold, I'm looking for it to fight the 1304.60 area. If we don't hold the 02, then we're likely to move back into the 1290 area. 93 is going to be, the price acceptance that we could come back to before we create the next leg up. We do have a 34-point move. The average large harmonic rotations in gold is between 38 and 42 that you want to start looking for, the possibilities of either expansion or a major retracement of $15 to $20 or more. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. Now,